Halftime Report. It's 12 noon. We're halfway through the trading session. I am Reema Tendulkar. If you look at the index per se, it appears that markets are consolidating after that heady run that we saw. But what it masks is the kind of outperformance we have vis-a-vis the rest of the Asian market. So at least we're managing to hold up in the green with minor gains. Look at the rest of the Asian markets. Cuts as deep as 1.5%, 1% coming through in the Japanese index, while the rest of the markets are sulking with cuts of close to about 0.5% on Brexit uncertainties. Apart from that, if you look at the mid-cap index, on an intraday basis, there has been a bit of a recovery. So at least the dip has been bought into, and the mid-cap index has seen a recovery of close to about 65 points from the lows. And the Nifty Bank, that continues to charge ahead. So outperformance coming through on that, scaling fresh record levels and peaks over there. So 28,600 on the Nifty Bank, and it's HDFC Bank, which has made a comeback today with a rally of close to about 2.5%. It has outperformed the other corporate sector banks like an Axis Bank, ICICI Bank, if you look at it over a one-year period. But today, it's HDFC Bank, which is carrying the Nifty Bank on its shoulders. Hi, Lata.
Oh, hi. As always, I'm staying in, of course, for the handsome Nigel D'Souza, who's on a 2-week holiday. Well, I think, Reema, you've summed up everything. We were always expecting that this massive bull run that we've been seeing for the past 4 or 5 days would pause for some breath because Asia is not very clement today. There is a bit of profit taking across the world in commodities, in all risk assets, either for Brexit fears or trade fears. Basically, they've also run hard, and so a profit taking was always around the corner. What's different for us is that we have not fallen as much. But to be fair, our year-to-date gains also are less than the rest of Asia. The flows into India have been more recent and more robust. So that also gives us a little more of a cushion, and we don't have to fall as much as other markets. And a fourth reason, tomorrow is expiry. So that will play its own games in terms of both buying of dips and selling of peaks. So it's a very treacherous day for traders. But for investors, perhaps the big question to ask is, have we missed the bus? Is it already time to get in? Those are it is for the investor that the questions become more relevant. If we are going to only see the market go on strength to strength, it's important to enter at this rate. But if this was, a brief catch-up and then we are going to see a long lull, investors may not have to panic. So the questions are more serious for investors. For traders, it's completely treacherous, very difficult to trade today. This is our Movers and Shakers segment, and our entire research team has lined up to give you more details of some of those sectors that are moving the most. Aviation, obviously, is top of mind. Take it away, Sonia. What stocks should we watch and why?
Well, as we know, the biggest negative impact will be on SpiceJet. SpiceJet has just released a statement where they've said they've already initiated grounding of the MAX planes. They expect to ground all the MAX planes by 4 p.m. later today. They've cancelled 14 flights today as well. 64 out of 76 planes in their fleet are in operations currently. They are working with Boeing and DGCA to resolve the matter. Now, we did get a chance to speak to a whole host of analysts as to what the impact of this would be. The biggest thing is that there's lack of clarity on how long these planes will be grounded, and that's the biggest overhang. This grounding of aircrafts of SpiceJet will create an unexpected drop in capacity as well. That will support yields and favor a player like Indigo, and that's the reason why Indigo is up almost 4% today. For Spice, the earnings growth on account of the volume expansion is something that will get postponed. Until there is more clarity on these planes, SpiceJet can try to take dry leases till this problem subsides. Kapil Kaul did speak to us just a while back. He said that airfares in the very near term will go up by almost about 15 to 20% because of the capacity shortage, and Interglobe may take a decision to increase their domestic capacity in order to benefit from the from the grounding of Spice and Jet Airways. For Spice, the sentiment is negative, but the P&L impact is absolutely nil. And since this is a fault at Boeing's end, SpiceJet could be adequately compensated for it. So there's a sentiment negative impact, P&L impact is nil. And for Indigo, of course, it will be a positive. Let's listen in to what the analyst told us earlier on.
Grounding one aircraft really does not mean Indigo gets to fly those passengers. I think what it does, of course, is it hardens the yield for everybody. Okay. So while I really don't think it is gain for Indigo as such, but I think, yes, for the industry, if the yields are improving, it is definitely, the market leader should benefit out of this. If you go back some months, when the delays happened in Airbus. Indigo actually got fair compensation for that. There is a fair reason to believe that these are the faults at Boeing's end. So there's a fair chance that while this is sentiment negative, SpiceJet could be compensated for the losses that they would be incurring because of this. While it is a chaos at the passenger, the traveler level, I really don't see this as a major P&L impact. So my sense is, in fact, it actually adds to everybody's gain because the yields are hardening. You've seen really crude correct from Q3 from about $78, $80 levels to about 65, 67 now. So my sense is, in fact, you'd probably see, these guys report much stronger Q4 numbers than probably what they would have reported in Q3 as well.
There is a lot of MAX inductions that SpiceJet was likely to get over a period of next 1 year. Then you couple it with there is already a jet significant capacity reduction by jet, almost about 40-50 aircraft grounded. Then you take the pilot-related challenges which have led to grounding at Go Air and as well as Indigo. Then you combine this all together. Then you're heading for a peak period. So I would think that the fares would go up and it would be a very significant Q1 both from the consumer perspective, because there will be capacity shortage and the fares logically would be much higher than that normally is in Q1.
Okay, let's move on and talk about Bajaj Consumer Corp. Yesterday down 10%, today down 5%. Mangalam, it's the promoter stake sale overhang?
Absolutely, it's the promoter stake sale overhang. And Reema, it's becoming a secular trend now that business families are selling pieces of their family silver primarily to make up for the missteps in their non-core or non-shining businesses. So Bajaj Consumer is among the shining businesses of the Kushagra Bajaj Group company. Promoters yesterday sold about 6.85% stake in the company. Now, if you took a look at their shareholding pattern as of December, the promoters held 66.8% shares in the company and 70% of that was pledged. Now, it would be very interesting to see why a company which has close to 400 crores of cash on its books, negligible debt, would have 70% of the promoters' stake pledged. Well, the answer lies in some other group companies. So case in point, we have Bajaj Hindustan Sugar. They have a total debt of close to 5,600 crores. For the first 9 months of this fiscal, they made a net loss of 310 crores. So financial problems taking on for Bajaj Hindustan. And out there, the promoters do not have enough strength to go ahead and sell their stake, because the promoters for Bajaj Hindustan hold only 15.2% stake, and of which 100% of that is pledged. So obviously, they had to look at Bajaj Consumer Care to get them out of this. So 6.85% stake sold. Promoters hold 60% now. A large part is held by institutional investors as well. So that is something we'll keep an eye out on, what the institutional investors do, whether they sell or not as well. So this is something we'll keep an eye out on.
Okay, thank you very much for that, Mangalam. We need to point out that the stock is actually in the green now. There is a mistake in the reporting. That's the correct graph of Bajaj Consumer. It's up 4.17% now. But the point, that argument that Mangalam was making is well taken, that a lot of promoter families have been forced to sell their family silver. In this case, the Kushagra Bajaj family forced to sell a bit of their stake in Bajaj Corp, originally Bajaj Corp, now Bajaj Consumer, to pay up debts in non-core businesses. Okay, the other set of stocks that are not doing well today are a lot of the PSU stocks. In fact, if you looked at the Nifty, the top 5 losers would be PSU stocks. Okay, at the moment, the pecking order has changed. But in the top 10, there are at least 3 or 4 PSU companies, IOC, NTPC, ONGC, Coal India. 4 companies at least in the top 10 list of losers. Nimesh, why?
So, Lata, we broke the story yesterday evening that the 4th tranche of CPSE ETF basket is going to get launched on the 19th of this month. For 19th is the date when the anchor investors can put in, and for retail, for non-anchor investors is 20th and 22nd. Now, the government is looking to raise between 3,500 crores to 10,000 crores. So, the 3,500 crores is a base book, and there's a green shoe option of close to 6,500 crores. So, up to 10,000 crores is what the government can raise. Now, this is a ETF where there are 11 stocks. Largely, the biggest weightage is with ONGC, Coal India, IOC, and BEL. These are the 4 stocks which will have a massive impact as far as the ETF weightage is concerned. I'm not taking RSC and PFC because of the impending merger. Those 2 stocks may not be part of the ETF. So that's why the weightage of other stocks will go up in that basket, and maybe that's the reason why the stocks are down in trade today. I think BEL at least in the last half an hour of trade has bounced back a little bit. But there is largely pressure on Coal India, ONGC, Oil India, and of course BEL also will be under pressure because of the fact that there is an ETF coming up in the range of 3,500 to 10,000 crores.
Okay, and the government divestment proceeds so far have touched 56,473 crore as against their full-year budget target of 80,000 crore rupees. The REC-PFC merger should give them 15,000 crore rupees, and I guess the balance can be made up with this ETF fundraise, and that's how the government is confident of achieving its divestment target of 80,000 crores. Thanks, Nimesh, for joining in. Here's a quick recap then of the top buzzing stocks: SpiceJet, Interglobe Aviation, PSU stocks like ONGC, Coal India, IOC, Oil India, PFC, REC, Bharat Electronics, NTPC, SJVN, NLC, and finally NBCC.
Okay. Well, those were the PSU stocks that you should keep on your radar. But what about the pharma companies? There is a lot of news brewing over there. Ekta, if you can update us.
Yes, absolutely. Well, a couple of stocks are in focus. So, for example, I'll start with Jubilant Life, where their Roorkee facility received a warning letter from the US FDA. And remember that we had already known that this particular facility had received a warning letter from the US FDA. But they have pointed out in the warning letter that there are some discrepancies which Jubilant Life Sciences would need to solve going forward. So, they have spoken about some amount of issues with regards to consumer recalls and the fact that there have been repeat observations from the last time that they had inspected the same facility, and hence maybe there should be some additional measures which need to be taken. So Roorkee does not contribute that much. It's around 4% of total sales for them, but nonetheless important that they've received a warning letter for that. Aurobindo's Unit 16 is in focus because they received 11 observations for that particular unit and was inspected from 22nd Feb to 1st March. Again, some of the observations, according to experts, will probably take some time to solve. But again, this particular facility is quite new. It was commissioned only in FY 17-18, and hence the contribution of financial impact would be limited even if there is an escalation or the remediation takes longer. And lastly, Biocon has received 2 observations for its Bangalore facility. This was basically, I think, for a PAI, pre-approval inspection for its insulin manufacturing plant. 2 observations are now known to the market, and the market seems to be a bit sanguine about it. But there are 6 additional observations which were issued following another inspection which took place in the Bangalore facility. So maybe there's a little bit of concern which the market is probably sensing on that.
Okay, so drug authorities creating a bit of a problem for Biocon investors. I guess it's thank you very much, Team Research, for highlighting those stocks that are the movers and the shakers of the